Welcome to the deep dive. Okay, today we're doing something a bit different. We're putting down the technical manual, stepping away from the charts. We're looking straight at the person in the chair, the professional trader. Yeah, we got this really interesting request focusing on the trader's identity and perception. We all sort of know the skills needed, right? Quick thinking, discipline, nerves of steel. But the real question, the tension we want to explore, is how do these people actually see themselves? The psychology bit. And how does that picture clash with how the rest of the world sees them?
A really critical point. Our goal today isn't just the how-to of trading, the mechanics. It's about those deeper, almost existential questions they face. The sources we looked at, they provide this fascinating way for traders to analyze themselves. Like, are you just your P&L, your profit and loss for the day? Or is there something more fundamental about the process itself? That's the core tension we're getting into.
Okay, let's jump right into that internal view then. The sources ask this really specific question about identity. Do traders see themselves mainly as entrepreneurs or analysts, or are they primarily risk takers? It's pretty unusual to break a job down like that into these psychological boxes.
And what's really fascinating is how they almost have to be all three. If you lean too hard into just being the analyst, well, then your world is data, it's patterns, finding that statistical truth, almost like an academic trying to predict things. But, pure analysis doesn't actually make you money in the market.
Right, because the market isn't going to wait politely for your research paper to be peer-reviewed. Things move too fast. That's where the other roles have to step up, I guess.
Exactly. So if you identify more as the risk taker, your strength isn't just prediction, it's execution, it's nerve. It's managing that exposure, jumping on volatility, having the guts to place a big bet when the odds are just slightly in your favor. That needs decisiveness. And being able to kind of wall off your emotions.
Okay, analyst, risk taker, and then the entrepreneur. How does that fit in? That seems like the manager role, almost.
Yeah, in a way. The entrepreneur doesn't just see individual trades or bets. They see their trading capital as a whole business, like a small company that needs to survive, needs to grow. So they're thinking about efficiency, systems, how to handle those inevitable losing streaks, drawdown periods. They're focused on preserving capital long term, looking beyond just the next trade's outcome.
So the big takeaway here, pulling from the sources, is that being a trader means you're constantly switching hats, like multiple times a day. You need the analyst to find the opportunity, the risk taker to actually do something about it, and the entrepreneur to make sure you can keep doing it tomorrow. And asking 10 traders who they are, well, you might get 10 different answers depending on if they just found a setup, clicked the button, or are looking at their quarterly statement. Burnout happens when they wear the wrong hat, maybe, or get stuck in one mode.
That's a really good way to put it. And this internal flexibility, or maybe confusion sometimes,
Yeah.
it leads straight to the next big question. Where do they actually belong? This brings us to what the sources call the belonging paradox. Do they identify with the traditional finance world, Wall Street with a capital W? Or do they feel like total outsiders?
Wait, hang on. Outsiders. How can they feel like outsiders? Their whole job, their money, it's tied directly to the financial system, isn't it? Whether they're at a big bank's prop desk or running a hedge fund, they are the engine, right? Isn't saying you're an outsider, just, I don't know, a bit of posturing, ego.
Well, that's exactly the paradox. Think about what the market demands. You often have to be hyper-individualistic. You need to bet against the crowd sometimes. You need to make fast, decisive moves, often contrarian ones. And that whole mindset, that psychological need, it naturally pulls you away from the collective thinking,
Right.
the bureaucracy. So they might feel like they're fighting against the very institution that, signs their paycheck.
Okay, so the analyst part, the entrepreneur part, those identities might actively resist the slow-moving, structured, traditional finance world.
Precisely. What they tend to value is speed, autonomy, getting judged purely on performance, like right now. But big institutions often value hierarchy, rules, compliance, long-term stability over immediate results. So this belonging paradox means they're deep inside the finance machine, using all its tools and infrastructure. But mentally, psychologically, they don't feel like they're truly part of it. It's like a self-chosen exile. They see themselves more like, I don't know, specialized commandos hired for a specific mission.
That tension must really come to a head when they interact with people outside of finance, right?
Yeah.
Which brings us to that perception gap the sources highlighted. This is huge. The daily tightrope walk between being seen as a gambler versus a disciplined professional.
Oh, absolutely. This might be the toughest external thing they deal with. The public story, the one you see in movies or news headlines. It almost always defaults to gambler.
Hmm.
Think about the Wolf of Wall Street or any story about a market crash. It's always presented as chaos, pure chance, maybe some reckless greed thrown in.
Yeah, the public sees the huge win or the terrible loss and just thinks, wow, lucky roll of the dice, or unlucky, like hitting the jackpot or crapping out at a casino.
Exactly, that word risk.
Hmm.
To an outsider, it often just means random chance. But for a pro, a disciplined trader, risk is something you measure. You quantify it. They aren't betting on a coin flip. They're trying to find a statistical edge, looking at, R squared, standard deviations, managing position size carefully. Their actual job isn't about chasing crazy volatility for thrills. It's about managing it, structuring it, finding opportunity within it.
So the end result might look similar from the outside, a big gain, maybe, but the process is completely different. How do
Right.
they deal with that misunderstanding internally?
They basically have to fight that gambler label inside their own heads constantly. Because the moment you lose discipline, the moment emotion takes over, you actually do cross that line into real gambling, where it's about hope and fear, not strategy and edge. So they often impose really rigid structures, routines, self-monitoring. That psychological weight from the outside perception forces them to double down on appearing and being structured. It's not just for show, it's for their own survival, to make sure they stay the analyst entrepreneur and don't just become the emotional risk taker with no plan.
Wow, that sounds like just a relentless, exhausting cycle of self-policing, which leads us perfectly into the personal cost. The sources talk about the serious psychological effects of living by the market. What are those real human impacts of being in that high alert mode day after day?
I think the biggest one is just sustained hypervigilance. The market doesn't really switch off, so your brain feels like it can't either. You're constantly swimming in information where every little piece could have an immediate financial consequence. You have to scan for threats, scan for opportunities all the time. Now that takes huge emotional control, and resilience. But doing that for years, it can really wear down your normal emotional responses. It's incredibly taxing. So their own feelings kind of get tied to the market's ups and downs, like literally tethered to the ticker tape. It often seems that way. They can experience these intense highs when things are going well and really deep, sometimes isolating lows during a bad run, a drawdown. And that volatility, that cycle, doesn't just stay at the office, it spills over. It affects relationships, life outside work. The job demands they learn to treat losses as just statistical noise, not personal failures, which is necessary to keep trading. But that required detachment, that necessary coping mechanism, sometimes can bleed into how they interact with people, how they experience life generally.
It sounds like the ultimate brutal feedback loop. The market finds every single psychological weakness, every crack. And if you don't address it, don't fix it, the financial punishment is swift and clear.
Absolutely. And that intense struggle, that constant refinement, it leads to the final big theme from the sources. They mention these stories of transformation. The idea isn't just that trading is a job, it's that it's this fundamental crucible. It actually changes who you are.
A crucible. Tell us more about that. How does trading change someone's identity beyond just, learning about markets or making money? What's the deeper change?
Well, if you spend years being forced, day in and day out, to confront your own biases, your fear, your greed, and you have to perform under this relentless pressure, constantly judged by results, the person who survives that, who comes out the other side, is just fundamentally different. The market has a way of stripping away ego like almost nothing else. You simply cannot afford to lie to yourself for very long. So the transformation is really about mastering your own internal world, developing intense self-awareness, emotional regulation, not because it's nice, but because it's literally requires to survive financially. In a way, it becomes less about just getting better at trading stocks or futures and more about evolving into a person who can actually function, even thrive, under constant high-stakes uncertainty and change.
That shift from analyzing, say, oil prices or currencies to intensely analyzing yourself. That's the real deep dive, isn't it? Okay, so to wrap this up for you listening, we've seen how a trader's identity is really fluid, almost fragmented. They have to be the analyst, the entrepreneur, and the risk taker, often all at once. They live with this tension, this paradox of belonging, feeling like outsiders, even when they're right at the heart of finance. And crucially, they're constantly battling that perception gap, needing to project and maintain that disciplined professional image against the pervasive, often unfair stereotype of the gambler.
And that whole journey, that required self-mastery, it seems like it never really stops. Which, if we connect all these ideas, leaves us with a pretty interesting question for you to think about. If the market forces this constant self-reinvention, this daily shedding of psychological weaknesses and adopting of new mental models just to keep up. Does a professional trader ever actually reach a final, stable, complete sense of self? Or is their identity inherently defined by that constant process of transformation, by the psychological flux itself? Something to maybe mull over as you consider the unique pressures and the fascinating minds operating in that high-stakes world.